Hi everyone, and welcome to the fourth and final webinar in the Bank of the Future series in partnership with Finastra. Today we have a 60-minute panel discussion entitled "What does the future of payments look like post-COVID-19?" We have four great panelists joining the session to share their insights. And I would like to introduce you to Paul Tomler, who is the Global Head of Payments at Finastra. Paul will be leading the session as the moderator today. Paul, I'd like to hand over to you to get things started.
Thank you, Natasha. And can I just add my thanks for everybody being here today. I think we have a great panel. I've got some great questions. And I think just to put things into context, I'm just going to kick off with a few thoughts to get us going. Then I'll introduce the panel, then we'll get into the debate. If there are questions you want to ask, please make sure that we have them. I'll do my utmost to be able to try and get as many of them in as possible, but I do look forward to all of your questions. Okay, so what does the future of payments look like post-COVID-19? I guess you all are the same as me, very used to this environment where we are on Teams or on Zoom conversations, but actually business still keeps on going on. And business will keep on growing. And this is part of the debate that I think we really want to get into, to what will it look like. We see a lot of macro changes. You know, we see Vision 2030 in the kingdom. We see the rise of the fintechs. We see the kingdom licensing 14 fintechs in 2019. E-wallet going up, you know, crazy numbers, 21 million operations in 2019. We see international payments with CMA and the RTGS systems. We see the VocaLink activity coming along with now IPS. Things are really moving, but actually, if you put some of this stuff into context, it's kind of also a perfect storm. And this was the conversation that I had last time I was in the kingdom. You know, really, the focus here is there is a lot of moving parts all happening at the same time. We have an incredible amount of legacy systems that are in place. And some of that legacy is nowhere near as bad as perhaps it is in the US or in Europe generally, but there are substantial legacy issues, basically from analog systems as we now try and move to a digital world. We see the need and the drive for a series of consolidated silos. So, you know, we're really questioning why we need as many different methods of moving money from A to B, and wouldn't it be smarter and wiser to try and get to one set of traffic? We also see, probably as a result, the move to real-time payments. I don't think there is a country that I'm aware of that isn't looking at real-time and what it can really do, and that drives this change effectively from a analog world to a digital world. You know, it wasn't that long ago that they were opening banks at certain hours of the day. You know, where I live at the moment in the UK, you know, that used to be 9:30 until 4 o'clock. Well, that's just gone. It's real time now. That's 7 days a week, 360 days a year, etc. There's also the need for the ISO 20022 uptake, and to try and make it deep and digitally enriching all of our transactions, not just putting lipstick on the outside. We see the time for innovation. I don't think there are any banks that are not trying to be a lot more innovative, trying to get closer to their client sets or to their citizens, depending upon which part of the bank they're interested in. At the same time, around the world, the regulators are really making the changes happen. They are really driving the standards and the timescales and the timeframes and the how, and they have a view on why, and they have somewhat of a view on what, but they all have an absolute view on when. And if you look at all 5 of those points: regulation, time to innovate, the move to real time, consolidation of silos, and legacy costs, to a degree, a lot of them are at odds with each other. As you try and innovate, but you're held back by legacy, you need to go to ISO, but actually it's a system that was based on COBOL or what have you from many years ago. Regulator is saying you've got to do that by this time. It's a perfect storm, or it's a perfect opportunity, and it depends upon where you are in that thinking. What we see, though, is that the banks are on average still spending 85% of their investment dollars on on making do and mend with our legacy systems. We see the exponential costs of trying to maintain them and keeping them going. And at some point that kind of runs out. The complexity of legacy systems are really at times crippling, and it's easy to forget that actually not so long ago, these were actually deemed as best of breed systems for us. And now they're not. At the same time, these fintechs are coming in, I can do that, I can do that. Yep, this is how I can do it. And it will be interesting to really see how that blend of the bank and the fintechs really work together, because personally, that's how that I see it coming along. But I think the other side of this, and I think this is a really important point, the actual profitability per transaction is coming down. And that curve looks to me like it'll eventually get asymptotic, and it will ultimately get to zero or near zero. But anyway, it's coming down massively, and it's not so easy now to monetize all of the transaction types that we have. At the same time, the complexity of change is going up and up and up and up. So we have this interesting curve that actually the profitability per tran is coming down, but the costs are actually going up. And what that implies to me is we have to do things differently, because the model that we use to monetize transactions by is probably not the model that we're going to be able to get at in the future. So what we do see at the same time is, you know, there is some real opportunities here. I think it's really about getting sticky to your client. It is moving to the real-time world and digitally engaging with your client. And that means that you will become sticky. It probably means that you'll be using a lot more cloud services, and we're going to have a debate on that in a second. And really that the elasticity and the non-functional requirements that cloud bring, its availability, stability, and all those pieces, or, you know, really make a huge difference here. That drives APIs and the integration of APIs and being able to fulfilling gaps and be able to include the fintechs to add value, to be able to drive platforms and partnerships. And I believe ultimately this conversation is going to be around a platform. I know there's a lot of people around the world that are saying, oh, this is going to be a utility. I think that's probably not the case. I think this is absolutely about adding value to the banking services and to the clients and what they need. I don't think that it will be a utility, but parts of it might be utilitarian in the way that it's implemented. So let me try and move on now and introduce the panel. So we have three panelists here with me today that I'm going to ask questions of. JK, could I ask you to introduce yourself, give a little bit of context about you?
Absolutely. Thanks for having me today, Paul. I'm JK Khalil. I look after the Saudi and Bahrain business at MasterCard. I've been with MasterCard for now close to 5 years with multiple capacities. Initially, I was part of their MasterCard Advisors group, leading the business in the Middle East, and that's more focused on, you know, partnering and helping our partners in the markets, whether it's banks, governments, and merchants, develop strategies and execute them across all the payment pillars and spectrum. Prior to that, I was a principal with Booz & Company for 5 years, and then before that, I had a stint in banking, both on the business side as chief of staff, on the treasury side, treasury sales side, and prior to that, on the technology consulting side.
Thank you, JK. Ali, if I could get you to introduce yourself.
Yeah, sure, Paul. Thanks. Hi, everyone. My name is Ali Goodrich Patel, and I have worked with Finastra for approximately 8 years. In my current role, I'm basically responsible for understanding the business strategies, outcomes of banks, and what that actually means from a technology transformation perspective, and how we at Finastra can actually play a role and help banks in their journey. So prior to that, I'm actually coming from a banking background. I've worked with Bank of New York Mellon, and I've worked with State Street.
Thanks, Ali. Laurent?
Yeah, thank you, Paul. Hi, everyone. Laurent Dayer. I'm General Manager of GDIA. We are the largest merchant-focused fintech in Saudi. I've been in payment and acquiring for a couple of years now. across India, Hong Kong, Europe, Luxembourg, and now the GCC region and Saudi in particular. So this is me.
Cool, great to have you here. A little bit about me, perhaps. I'm the global head of payments here at Finastra. I've been here for 2 and a bit years now. I've been in the industry for, I think, nearly 20 years now, running other payment businesses for the last 15 and being the CEO of a large one, looking after Middle East and Africa. So I also sit on the UK regulator board and have been heavily involved in the build out of NPA and the design of PSD2, some of which I think will be very useful in this conversation, because I think there are lessons that we can learn from some of that activity. Okay, but JK, so I'm going to come to you first, and just to get us going a little bit. So instant payments is one of those things that's been around what feels like forever in some ways, and then in some ways kind of not, depending upon where you are. And I know you're a very highly traveled man as well. So just to get us going, open question, what are some of the challenges banks are facing when it comes to getting to instant payments or real-time payments, whatever you want to talk about?
Yeah, very good way to position the question, Paul. It does feel like it's been forever, but really not in many ways. You know, at MasterCard, we're kind of, we've ourselves embarked on this journey about 5 years ago, when actually 10 years ago, we said we want to become a multi-rail payments company. 5 years ago, we sort of put our money where our mouth is, and our largest acquisition became Vocalink out of UK, which, as you know, runs today 5 live, instant payment or real-time payment engagements globally. I'd like to unpack your questions actually in 2 ways. One is, I would say, let's look at the benefits of it, and then let's see, let's really focus on what it's bringing to the ecosystem, and then really try to wrap our head around what's potentially challenging banks to rolling it out, whether it's here or anywhere else, based on our experience at MasterCard. So in a nutshell, the beauty of IPS is, it brings faster payments to provide customers with unique and powerful offering, if you think about it, to support business, government, and consumer payment needs across a variety of payment flows. So that's the beauty of it. It's so versatile. Economies obviously benefit from it through an increased velocity of money, while banks can offer businesses and consumers new, safe, simple, and secure applications and services. So let's unpack that a little bit. Maybe we'll look at it from a consumer and B2B perspective. Consumers expect instant payment transactions, and more so today, especially on the receiving side, on the beneficiary side. And that could be a great way for banks to think about it when they think, okay, what is a defensive play for me to continue to engage my consumers, right? IPS could be one of them. It helps you engage, retain customers, expecting the immediacy of cash movements, especially on the beneficiary side, as well as an offensive way for banks to think about new ways to engage customers and continue to create stickiness by offering and monetizing new use cases through IPS. Now, the other key segments that I was saying is, if you think about it, is SMEs, right? Especially in the new world where digital flows are increasingly more important, and I'm sure Laurent can give us plenty of ideas on things that he's working on, and some of the things we're working on together as well. If you look at, for instance, some surveys from 2017 or 18, they'll tell you that 2/3 of SMEs globally say that they would change their bank if they would just give them access to real-time payments, right? This ability to make payments as close as possible to due dates without fear, let's say, of incurring any late penalties, or ability to receive payment instantly, easy back-end reconciliation, sometimes some support with some tax payments or VAT payments is just, priceless for SMEs. So that kind of liquidity or greater liquidity that can be offered to companies as well as consumers is just, I think, the natural next step for banks. Now, keeping that in mind, and having seen, this IPS technology go live, as I said, through Vocalink in markets like UK, Singapore, US, Peru, and Thailand, we have a real focus on proper implementations of IPS, because we understand the benefits that it can provide, but also we know the challenges that banks can hit when they try to launch them. That's actually very topical today, because, as you know, in Saudi, we're working with Vocalink and IBM to roll out with Saudi payments the IPS technology. What we see, or what we have seen globally, Paul, is that and that's actually something we can see even in surveys and reports like the ones from Deloitte recently. A major barrier to the transition, right, to instant payment systems is the cost of building a complicated or up-to-date payment infrastructure. Most banks must undergo high-risk, expensive, multi-year projects to elevate their processing platforms to modern standards. And meanwhile, they have technology platforms that are increasingly outdated. Most banks in Saudi or otherwise are all undergoing one way or another some massive digital transformation, and that's ongoing, right? So this is, I think, one of the most important ones. Now, there are ancillary ones or equally important ones that are not necessarily related to systems that we believe that banks that want to properly roll IPS have to really carefully think about, such as, does your bank have well-developed end-to-end user journeys and existing rather digital, convoluted customer experiences that are not ready for creating or for delivering new use cases on top of it, right? Do you know what are the target or what are the needs actually of your consumer segments, of your existing consumer segments, and what would be the most relevant use cases to roll out for them? Or are you just sort of copying and pasting? Because that's an important one that could really help you. It makes all the difference between hitting and missing that opportunity, right? Similarly, do you know what are new target, customer segments that you want to go after, and hence how are you curating your new use cases, hopefully on better technologies and better platforms that you're able to provide from back-end perspective to deliver that. What we've seen also is sometimes banks deprioritize IPS and they think, oh, you know what, open banking is coming. So, these things will talk to each other and, they're not separate. So eventually that will take care of itself. In reality, it's not. They're two separate things. And when they get mixed, they sort of deprioritize each other, and you end up wasting a lot of times while banks that are super focused would be out there out of the gates and sort of, hitting these key milestones. And there's like a lot of other challenges. I'm sure you can speak to them from a technology perspective, Paul, such as, real-time treasury management or proper bandwidth to, manage real-time spikes. Like imagine you run a campaign, say, hey, let's raise some money for so-and-so cause. And, 3 million consumers send 100 riyals at the same time. That's going to be a bit of a problem if you don't have the right sizing and the right, bandwidth created for that kind of use case. And finally, most importantly, we always say safe, smart, and secure. Security is going to be a problem, right? Faster payments means faster fraud. So if you're not thinking also about how you're going to manage that in a real-time payments world with different rules, not like carded rules where you can call your bank and the bank can reverse the payment, that also has key implications on the confidence that the consumers will have in your real-time payment services and solutions. So I think these are some of the potential challenges that we are seeing. These are some of the same challenges, to be honest with you, that we're working on in the market with some of our key partners in Saudi and in the region when they're thinking about real-time payments. And that's the kind of advisory we provide them to help de-risk that implementation as they go forward with it, from day one.
Yeah, I think, JK, there's some really good points there. I mean, I didn't say earlier on, but I've been working with Vocalink since 2008 as we got the UK faster payments thing up and running. So a lot of experience there. And by the way, a great acquisition to the portfolio. A little bit late for me to say that, but it really was. So Laurent, let's come to you. Similar sort of question. You've heard the points that JK have made. Let's give us perhaps your view on the challenges.
Yeah, thank you very much. Well, I think I can only agree, and there are a couple of recent trends that are really helping the transition, in my view. So, one of these trends is clearly that the average transaction value is sharply decreasing in the market right now, at least in Saudi. And well, I mean, being the first non-bank acquirers.
Same across the world. It's not just
exactly. But I mean, we were the first non-bank acquirer approved in Saudi, and obviously, when you start running your book and you in first analysis you see the ATV dropping months on months, you say, "Whoa, what's going on here?" Right now, I mean, thanks God, obviously, it's combined with a vast increase in transactions. So the drop in ATV was in the region of 40% on our books, but we focus on SMEs, right? So it's a skewed book. Now the transaction has been essentially increasing by more than 50%, and even if you look at the low value transaction, they're increasing with 3 digits. And to bring that back in perspective to what we just said, I mean, ahead of our launch, we spoke to 1,000 small merchants in the market, and I can only agree with essentially their number one requirement is to get their money quick, and getting their money quickly becomes a challenge for several reasons. I mean, for small merchants, you know, getting them a transfer fee every day with your settlement doesn't make sense when you've transacted only a few transactions, right? So whereas it's insignificant for the big ones, for the small ones, actually those Xavier fee transfer between one bank and another are just killing, which means to make it economical, you just don't transfer every day. Even if you don't sit on the float, you still don't want to transfer money every day. So that desire to be sitting on their funds and having the funds accessible literally immediately is something that we need to provide them. The sensibility of to the cost when compared to that average ticket value that are dropping makes it that any fixed fee model essentially might turn up to be very expensive. So those are interesting, let's say, combination of trends that are positive in the market, but that force for new models to be introduced if you want to give the right, essentially the right service, but at a decent price point as well.
Yeah, interesting. I think I think when you bring real-time payments in, whatever book that you had beforehand, it kind of changes the whole experience. And you know, real-time liquidity, it really comes into sharp focus. You think you could do it, you know, half day per hour, but when you're doing real time, it's real-time liquidity, you know, and intraday liquidity becomes really very sharp to get your brain focused around, as opposed to I'll sort that out later on. Ali, you had JK and Laurent. Now, perhaps you could give some of your thoughts of what you're hearing in region and what clients are saying to you.
Thanks, Paul. I mean, yeah, they both raised fantastic challenges, right? But I think I have this opportunity and luxury of being intimate with the banks over here on the ground, and not in specific with Saudi Arabia, but in the entire region. Mm-hmm. And what I specifically notice is that whenever there is a change, and if it's mandated, and if there is a deadline, you will see banks scrambling to make that happen, right? And in that process, it creates a domino effect of problems, right? So one would be that to have a quick time to market, they would adopt a tactical solution for a pinpoint problem, or then carry out some sort of workaround. And in the long run, I think banks kind of lose the focus on their long-term strategy, which is the eventual reduction of TCO, or maybe future-proofing themselves from the ongoing and ever-increasing changes in the payments landscape. And I mean, this is not my opinion alone. Even when I speak to Saudi payments, they themselves say that when they speak to banks, they actually tell banks that you cannot be looking at a payment solution provider who's going to come and implement a solution for you and walk away. You really need to start focusing on having a strategic payment solution partner who's going to see you through this journey.
Okay, thank you, Ali. I think, you know, I think one of the benefits of being in the UK is we've seen many iterations from, you know, from when 2006, the UK government said that we'll do it. 2008, it got kicked off. 2010, it was live. You know, in the UK, we've had 4 different variations of this, and we've had to learn a lot. What's fascinating about this is to be able to use all of that experience and all the mishaps that have happened around the world, and there have been plenty, and actually using all of those to make sure that here in region it works really very well, and those mistakes have been ironed out and factored in. I think that's a really important piece to, you know, to think through. What I would say though is, we see an awful lot of conversation around the, you know, let's call them value-added services. You know, apps that can be added on because of instant payments, real-time payments, effectively allow you to operate in a digital way as opposed to a analog way that's on a computer with zeros and ones, but in a digitalized way. And that's a very different mental process. Laurent, what are some of the value-added services that you would like to see in region? And perhaps why, if you wouldn't mind?
Yeah, so I mean, again, I'm slightly biased because I look at it more from a merchant perspective. But what we see a lot, right, is the all that gig economy really really benefiting from COVID, right? So if you look at all the food delivery platforms and online concierge kind of platforms here, their volumes have increased like crazy. So the positive things is that in terms of behavioral changes in the market, while this crisis essentially accelerated the transition that was started, it accelerated by probably at least a year and a half, right? So you see now lots of people comfortable paying digitally when they were not before. So what does that mean for us? Well, that means that now consumers expect to be able to pay digitally everywhere. Now, how do you deal with that when you have 200,000 drivers, for some of those platforms that are using third-party fleet? How do you equip them with payment devices and stuff? So obviously the first part is, well, find them cheaper way of doing that with solutions that we're rolling out with MasterCard now, SoftPOS or Tap on Phone as we call it. So that helps on the one side. But now, thanks to that, you go to the next page, which is, well, now that the money is in, how do you move that money quickly between the driver, the platform, the bank, the processor, and all of that? And that's where you see those two elements of the chain complementing each other very well. Because for the driver, quite frankly, they compare that to just taking a cash note in their pocket immediately. So if you have to tell them, look, now you're going to take payment, but you're going to wait for 4 days before you see the settlement on your bank account, they're not taking it, right? So that's how you really reconcile those two worlds, I would say.
Okay. Ali, do you want to come to give us your view on the value-added payments we're seeing?
Yeah, I think obviously beyond the instant access of funds, well, on the corporate side, it's definitely, I've seen use cases around instant liquidity transfers for liquidity management. Obviously on the retail side, you're seeing request to pay, you're seeing buy now, pay later. But interestingly enough, I was the other day reading about crowdfunding, right? Obviously coupled with open banking and instant payments, but I'm seeing this pick up in the UK and the US. And it's not only going to bolster the banking industry because you're seeing crowdfunding happening in the real estate sector. So I believe that will even promote business over there.
Okay. JK, what's your view? What are the value-added services you'd like to see?
Well, there's two ways we look at this, to be honest with you, Paul. One is through the lens of, as I said earlier, MasterCard as a multi-layer company. And the reason we believe in multi-layer, to be honest with you, is simple. It's because we believe in choice, right? Consumer choice. We don't believe that the future is going to be solved with one kind of rail or one kind of use case or one kind of technology. So we believe that rather, we believe that a multi-rail mesh of interoperable networks rather is going to be the solution for how the future is going to look like. I think in that context, and then to add to what Ali and Laurent just mentioned in terms of use cases on retail and B2B, I think, request to pay is going to be probably the biggest one that cuts across both consumer and B2B. Specifically on the B2B side, I think supplier payments are going to win, be the biggest winner rather. Payment on delivery for both B2B and SME and as well as consumer payments. I think there will be other niche use cases that I'd like to see also, and that would really complement the market in terms of creating more data flows, which will help SMEs as well as consumers get better access to credit, such as e-billing, such as factoring, such as electronic check processing. Excuse me. But I think there are more interesting cases than just payments. Such as like smart mandates, to auto-approve regular expected payments. So more on the sort of intelligence side, or real-time fraud detection, needs that will drive certain kind of flows to change rails. I think tax will also be a very interesting use case if you think about it. We've seen it in other markets. So income tax or VAT in flight is another interesting one. I think a bit also on the cusp or on the outside of it, or more future forward looking, would be stuff like digital ID for verification, you know, which at least in my mind, I'm a big fan of digital ID eventually, is the ultimate use case for any network to nail down as it makes all other use cases safer, smarter, more secure, more reliable, right? And an aspect of that, obviously, you know, tokenized ID or digital ID is, you know, IoT gateways for micropayments, you know, for top-ups. These kind of use cases will all be, let's say, more possible and better provided with IPS, in my mind.
I think that's true. I mean, I genuinely think I think, by the way, the ID piece, completely with you on that. I think that, you know, if you look at it from a KYC point of view, it just takes it away effectively, and, you know,
Absolutely.
becomes a bit of an anathema. On the other hand, I think request to pay factors in so many places. It takes away the need for so many of the DDs, so many of the, let's call them mass payment requirements that effectively are a throwback to the 60s. We set them up because we didn't have bandwidth, you know, so some of these things are still around, right? So I think there is a lot. I do think that the thought through of apps, whether it's a request to pay, or it's KYC, or it's sanctions checking, you're just going to see them come in. And I think they will. We haven't thought through all of them yet, but there's a lot of them coming. Look, I want to I wanted to slightly change gears on you. I think these next points are kind of related, but I want to talk a little bit about cloud. And while all the things that we're talking about don't need cloud, to a degree, they do actually facilitate the move to cloud. But, you know, we see cloud adoption growing all over the world. We've actually seen DG FISMA in the EU come out and say, actually, we prefer cloud, which not so long ago, Europeans were going, yeah, if you want, it's up to you, but, you know, same rules apply. Now they're actually saying, no, we want it to, and there are reasons for that. But JK, if I could come to you for a second, cloud adoption is growing. In region, perhaps you could give us some context.
Yeah, look, I mean, to your point, let's take a step back and look at it from a regional perspective. You know, you see the advent of AWS a few years ago. Azure is making some strides. A lot of you know, cloud players are looking at this region a bit more seriously, let's just say now, right? And that is on a backdrop of a better, let's say, adoption globally, as you mentioned, right? We've seen significant growth with rapid adoption among various regions, especially on the developed world side, Europe, US. Especially large companies, parts of governments are much more comfortable with it. And particularly, let's just be very honest, in areas where data, let's say, privacy or you know, residency isn't really an issue. For instance, we were just looking at this Gartner report coming out earlier this year on forecasted public cloud service in the Middle East and North Africa region, and it was expected to grow at 21% in 2020. Now that's like pre-COVID, right? But still, I think this is great because I think there's a collective economic goal in MENA to become more technology and data centric. And look, you can't refute the benefits of moving to cloud, especially on the value-added services side, on the total cost of ownership side, and all the small use cases that could come from that across, especially banking, government, merchants. You know, all the way from use cases like address verification, IBAN checks, you know, fraud, you know, intel services. I mean, these benefits feed into and enable and support so many other, you know, economic pockets, and they force banks and other large players to work harder to differentiate when access and ability to provide such services becomes so cheap. So I would say, you know, multi-speed adoption in the region, to answer your question, can it be better? I think yes. I think COVID hasn't helped, to be honest with you. But in a way, for the smaller players, COVID has definitely accelerated. As you've seen a lot of these smaller SMEs migrating faster to the cloud, realizing that, you know, this physical infrastructure is just, you know, far from being resilient, especially in situations like this year.
I agree. Ali, can you give some context?
Yeah, sure, Paul. So So just adding, right? You saw Bahrain bring in AWS, and AWS opened their offices in 2019. You saw the data centers of Microsoft in Dubai and Abu Dhabi from a UAE perspective. But I believe it also boils down to follow the leader. There are some banks that are leading, right? And obviously the followers are waiting for the leaders to take that plunge so that they can learn from them, because they know that there are risks involved. They know that regulations are still coming in place, but may not be as transparent as they're supposed to be. But definitely catching up. You will definitely see in the next 3 years, maybe even earlier, that the leaders would have even moved their core applications to the cloud. It's happening.
I think it is happening.
And I like.
Please, JK.
Sorry, I was going to say, I like Ali's point, because, and in many ways, I don't know if you're saying it tongue in cheek, but in many ways, you see in the same market, multiple banks interpreting regulation differently. And sometimes
exactly
one place, and that's, by the way, just beyond cloud as well. I mean, this goes beyond cloud, right? Some service will be launched, and a bank will be super happy about it. You talk to another bank, and they'll be like, "Oh, I don't know, the regulator won't be happy, or my infosec team will be comfortable, or my compliance, or whatever that," right? So it's always these very suspicious, I would say, interpretations that are like 100% black and white. I always find them interesting.
Yeah, and it's not even an 80-20 in this case. It's more like a 90-10 or a 95-5, where the 5% are actually making the moves and have everything in place and know what's going on.
Well, we see, won't we? So I always find it fascinating to see which people want to push these things forward. I mean, generally, they've got a good reason for it, and it's the people that aren't pushing it forward, they also have a good reason for it. Maybe it's really hard for them, right? But, who knows? Laurent, from your point of view, and perhaps if you could throw in some context specifically about the kingdom, that would be really useful as well.
Yeah, so I mean, first of all, the reality is very different whether you operate locally or cross-border, right? If you're big locally, it doesn't really matter. I mean, installing locally, whether that's in a local cloud or local on-prem, at the end of the day, after the big project, you're done and you maintain, but that's what it is now. Now, when you try to replicate your business model across multiple countries around, that's where not having cloud solution essentially really makes your project a lot more risky and a lot slower. Now, I mean, being an incumbent player in the market, somehow the fact that there was no big international cloud available kind of also shelved us and protected us against international players coming too quickly in, right? So I can't completely say that that we are not benefiting from it. I'm actually pretty sure that the local cloud benefited quite a bit, because you have I mean, at least if you operate locally, you have a lot of the advantages of cloud infrastructure without without essentially compromising with the data on soil and that sort of things. So very different realities if you operate locally or internationally. Now, in our case, moving to other countries in the region, well, that's where you want to consolidate some of the aspects, everything around, KYC, KYB services and stuff. You want to centralize and standardize that. You don't want to replicate that locally multiple times. So, yeah, I mean, that's essentially the journey that we've gone through. Actually, pretty happy with the local services we have, but clearly on a scaling strategy, it would be much easier for us to have access to one of the large providers.
Yeah, I agree. Look, I've got a question. So guys, if you want to ask more questions, please do so. But I've got a question here. Do you believe that the digital transformation will force instant real-time payments to be the number one priority for the payment industry? I have my view, but let's just try and answer that question. Ali, what do you think?
Yeah, it kind of goes hand in hand to say, but then I think digital transformation is again, it's customer front ending, right? But if you do not have your infrastructure in place, it's not going to add any true value. So definitely yes. I mean, you've seen this start before this buzzword of digital transformation even existed, you will see that instant payments existed in some countries, and they were benefiting from it. I mean, the customer experience was great. Definitely, if you want to improve your customer experience from your front-ending applications, sure. But I think instant payments and digital transformation kind of go hand in hand.
Yeah, I think that's probably about right. Laurent?
Yeah, I mean, I'm not sure if it would be the priority number one, but it's clearly very high up, and it creates new business model that are enhancing the experience, both from merchant perspective, buyer's perspective, optimizing cost. I'm thinking about all the recurring payments. I mean, do you still want to store your card details forever, or do you want to do more mixed processing, with the advantages of cards on some transaction, but then the advantages of an account-based payment for others? And I like the way JK was positioning that as, cross-rail kind of way of processing stuff. I absolutely love that idea. I think giving users the convenience of choosing the way they want to process and when, I think that's critical, and for that it's going to be very helpful.
Yeah, I think that's right. JK, if I come to you, because your firm or your combined firm has implemented real-time payments in many countries now. It's not just a one-off. Perhaps you've got some context about it being the most important thing.
Look, I have a different perspective on this, Paul, slightly different, which is to say, I mean, look, I used to be a consultant for banks many years ago. And I remember even back in 2000, 2005, 2010, we were talking about digital transformation for banks. I mean, we still talk about it today, right? You kind of like wonder, is it a journey or is it an objective? Is it? In my mind, clearly, given the speed of change in technology in general, I mean, look, let's simplify. Take retail, for example. Take retail. Take what Amazon can do today with Amazon Go versus what Walmart can do 10 years ago, right? Banking isn't changing at that same rate. It's not. Take e-commerce. Take what you've been able to build out of something like an Amazon. It's just different. I think digital transformation is a continuous journey. Honestly, that's number one. Number two, it is much needed today more than ever. But the themes that drive digital transformation continue to change over time. So maybe if you look at the last 10 years, it was about like, how do you upgrade your core banking systems? How do you create these data warehouses? Today, it's more about like, are you thinking about your front end? Are you thinking about end-to-end user journeys? And are you agile? Are you creating stuff that's going to be there for 5 years, or it's going to be like changing every 6 to 18 months? So I think the themes and the drivers and sort of objectives that digital transformation should operate within are what's really changing the game. Now, in that context, I think that IPS is only one of the manifestations of what is a burning need today that is about to manifest itself through the next round of digital transformation. But it's not to say that you need to start a digital transformation today in order to roll out IPS. I think if you haven't embarked on digital transformation, and I doubt there's any banks who haven't, you can argue actually most are on a digital transformation journey. They're just not at the right pace. They should just go for it. I think the real question in my mind is your digital transformation that you've embarked on, many years ago or last year or a decade ago, still relevant today? How are you refreshing that? How is your strategy being meshed with your digital transformation? And how are new use cases like IPS, tomorrow there's going to be open banking. What are you going to do about it? The day after is going to be something else, interoperability. Next, merchants are going to offer financial services like in China. What are you going to do about that? So how do you continue to weave relevant topical themes into your digital transformation? I think is the way I would pose this question to banks and other financial service players.
I think that's right. I think that the truth of the matter is you don't need digital banking to have real-time payments.
So Paul,
So the thing that I would say though is they kind of come along at the same time. And if you think about that, it's more I need to do real-time payments. What would be the best type of technology that I would use? Well, I wouldn't build it in COBOL as a absurd example. So you probably will build it on a digitalized world. And frankly, going from the analog world to the digital world is probably a once in a lifetime change. You will never do digital again. Once you go down that cultural change route, you end up in a very different place. So I think the things are not layered, but they are inextricably linked because of timing. Ali, you wanted to make a point?
Yeah, so if you look at it from a service provider perspective, right, they're using digital transformation for accessibility. And at the same time, they're trying to win customers through a great customer experience, right? But you give me a good customer experience based on your definition from a service perspective, and you give me the sexiest front end or UI. But what is the point if I'm wiring a money to the US? This is beyond local instant payments, right? But if I'm wiring money to the US, which I did last week, it hasn't reached the beneficiary yet. So how does that tie in to customer experience and digital transformation without having this instant payment world a reality yet?
Yeah, that's a slightly different point. And I think it's one of the things that I think we'll come on into a second. But funny enough, I had to send my son some money and he's in the US. And I know it's not going to get there till Wednesday. So I get it, right? So, but it's kind of funny. It wasn't that long ago where, the UK was doing payments that took 10 days to clear. Context is, it's important here. But let's kind of switch gears again, because we kind of talked a little bit about open banking. And I think it's an important piece because it kind of is layered on top. I think most people believe that open banking, because of timing and because of the technology changes that people will make, is probably the next step on from instant payments. Laurent, would you like to comment on that? And also, if when will you see it, do you think, coming into the kingdom?
So, sorry, Paul, come again. I was watching the chat at the same time. Sorry, my bad.
Just saying that, I think many of us would believe that open banking is the next logical step, given the technology changes that are happening because of instant payments or real-time payments. What's your view on that, and when do you think it'll come to the kingdom?
Yeah, I mean, I think it's coming up, right? I mean, Saudi Payment is doing a great job in terms of infrastructure. Seeking for professional advice where they need it, putting the right budgets in. With now, as you mentioned, the number of fintech being licensed. I mean, it's several tens of them every year now, right? So those underlying fundamentals are going to be used, and it's not going to take very, very long. There are 6 or 7 digital banks starting right now. So how will they position themselves? And I mean, how long will it take until you have aggregators in there and those services that require access to multiple accounts and really working on user experience? So it's a matter of months, no longer years, for sure.
That's interesting. Didn't realize quite that quickly. JK?
Sorry, can you say that question again, Paul?
Yeah, it's about open banking, and it's the next logical step. Timing.
Yeah.
What's your view?
No, absolutely. Look, I definitely think that and kind of like the answer is in the question. Definitely, open banking is something that's coming in my mind, right? That's the first thing. It's no longer inevitable, or it's no longer like a work of fiction from some sci-fi movie. If I think about it, I think I like to break it down in 2 parts, like why open banking, just to make sure everybody's aligned, and the potential ways, I'd rather say, that it could play out in the region, and in particular in KSA, right? So when you think about open banking and what it allows in terms of enabling fintechs and other market participants to connect to banks via application, programming interfaces, APIs, retrieve financial data, initiate transaction, and so on and so forth. Basically, the advent of potentially quote unquote open finance, right, as a value creation layer. In a way, for me, it's a very wide spectrum. use cases and, you know, new ways of engaging consumers. For me, I think about IPS as a rail, as opposed to, right, open banking more as a way of doing banking. And a way to include new participants and invent new cases and come up with not necessarily sometimes payment-related type services or applications, right? So I think in that perspective, if you look at it this way and you keep in mind what open banking can do, both for the consumer, you know, in terms of ease of onboarding and KYC and virtually frictionless banking or merchant services, you know, or digital interactions, in terms of what it can do to SMEs, in terms of account information aggregation, you know, offering advice, you know, robo-advisory, payment initiation services, you know, bookkeeping, whatever, asset factoring, debt financing, all these things. That to me is the power of open banking. Again, to me, IPS is just a leg. It's a use case, right? It's a pipe. It's not necessarily a use case. I would rather say it's a pipe. It's a rail. And that could enable some of the use cases of open banking. And definitely amplify the power of open banking. You know, another way to think about your question is to say, okay, open banking alone or open banking plus IPS? Like, what would be sort of, how do you compare and contrast? And definitely open banking with IPS is far more powerful. So in a way, what Saudi is doing, which is today rolling out IPS and hopefully Q4 this year and definitely Q1 next year, and then unlocking open banking. And we're having these discussions now in the market with some of the potential participants. And, you know, I think it's the right way to stagger it from a roadmap perspective.
I think that makes perfect sense to me. Ali, I'm going to come to you and ask you a slightly different question. So we've heard a lot about the GCC RTGS changes, and we've seen in other parts of the world, ASEAN network, you know, that are coming across in Europe. We're seeing the similar sort of activities. Do you think that that's going to cannibalize the current use of SWIFT within the region?
I believe so, Paul. I totally believe so, and it's not only the GCC RTGS or, you know, the rails that are coming up in ASEAN. You will also see that the UAE, in terms of Buna, is creating another rail for the 17 countries in the Middle East. I think it's more from a control perspective. It's more from a transparency perspective, as well as from a speed and a cost perspective. So yes, definitely, to a certain extent, I see this happening.
Okay, thank you. Look, guys, I'm going to ask one more question from the audience, then I'll ask all three of you to sort of give us you know, a little bit of summaries. We've got about 6-7 minutes to go. But I think one of the questions that's come up is around security of payments. And I think it's a big issue, especially the real time, you know, and I think JK, you mentioned the point, real-time payment allows real-time fraud. Completely understand that. I think though, when we think about it in terms of other silos, whether it's cards or checks or RTGS or even mass pay, it really, it's you know, it's a different type of activity, different type of beast. You simply haven't got time to do all that work. You have to do things differently. Do you want to perhaps comment a little bit about that, JK?
So specifically, you mean on the risks associated? You mean?
Yeah. You know, you typically with the other rails, you have days, 45 days in some cases, to actually go back and address. But if it's a real time, you press the button and it's, you know, it's final.
Well, you're right. I mean, that's the problem. I mean, look, with great power comes great responsibility, as they say, right? If you want, I mean, I think the easiest way to think about it, Paul, is to say, if you gave somebody $100 on the street and they walk away, what can you do, right? And if they defrauded you that $100, if they promise a service that they are never going to offer, it is, in a way, you know, I'd like to say that there's a world where we're going to be able to mitigate even that risk, but eventually every technology has its mitigation, or its limitation rather, and you can't mitigate every risk. It is definitely hard to do refunds in the world of digital currencies, blockchain, real-time payments. It is, you know, unfortunately, it is a true problem. And maybe today at this point, I can't tell you that we have a solution for that. I think we have plenty of solutions, for instance, on tracing where funds go. And, like for instance, we have, money mule accounts type of fraud platforms that are already like in play and live in the UK that help banks trace back, money mule networks rather across the system. But that's, I would say, unfortunately, exposed. That's after the fact, right? That's more about, law enforcement and investigative type, financial crime activities that happen after the fact. So I mean, you have to be very clear. That's why authentication becomes extremely clear, and that's why I said ID earlier is the answer, because you can, after the fact, you cannot reverse what's been done. More about validating in the moment, in flight, that this is the right party you're interacting with, and that is the right amount. And there's sort of like a tokenized contract creating between the buyer and the seller, so to speak, right? Simply to protect all parties involved.
I think that's exactly right. Exactly right. So look, in the last couple of minutes, Ali, I'll come to you first. Just give me a couple of sentences to summarize where you think that we are. Laurent, I'll come to you, then JK, I'll come back to you. So Ali, perhaps if you could just summarize our session today and your thoughts.
Yeah, thanks, Paul. So I think from a payments perspective, open banking perspective, the topic was, what does the future of payments look like, right? Well, at Finastra, we believe that the future of finance is open. And what we are currently doing is that we've created a platform called Fusionfabric.cloud, right? Where we are inviting fintechs, startups, banks, financial institutions, developers to access APIs of all our core solutions, which have been hosted on the cloud. And the way it works is that you have 3 sections or 3 stages, where you have Fusion Create, where you can come in, access these APIs and build applications. Then you have Fusion Operate, where Finastra will test these applications to the highest standards. And then you have Fusion Store, where you can publish these applications and monetize it. And I strongly believe that this is where the industry is headed, right? We're headed towards a platform world, which is accessible to all, because we strongly believe that innovation comes from the outside, and we do not want to limit it to anyone.
Okay, thank you, Ali. JK, if you would go next.
Sure. Yeah, I mean, look, I think I agree with Ali 100%. We also are big believers in API. I think we're now like an API first organization. So all of our APIs are published on the web. Developers can work and use them to their benefit and to the benefit of the end users. Look, I mean, in MEA, in East Africa, there's about 1,200 startups today and fintechs in play. In Saudi, only there was 20, but 2 years ago, now there's about 60. We're talking to maybe a quarter of those, fintechs, and really engage with them on these similar discussions. How do I launch? How do I phase out open banking? Is IPS a sort of day one priority? Should I focus on, existing rails or known rails or traditional rails such as cards or other, remittance, for instance, rails that we have at MasterCard, like MasterCard Send? I think these are very exciting times, to be honest with you, Paul. We're very open. I'm just gonna keep that message crisp. I'm gonna say we're very open to any startup, to any fintech that have ideas around payments, around smart contracts, about ID, around authorization, anything in the payment and transaction ecosystem. We can help facilitate discussions. We can connect startups with banks, with merchants, with governments, because we are connected to that whole ecosystem. And we definitely have partnerships with some very large technology companies such as yourselves. And we continue to sort of help work together and collaborate together to define that a more open and easier and more secure future of payments.
Thank you. Laurent?
Yeah, look, I mean, I think a lot has been said now. So it's all about going essentially better, faster, cheaper, and while maintaining acceptable level of risk and quality. So it's indeed very exciting. I think the new business models are coming up every week or every month now. So that makes life very interesting in this industry. So lots of good things to come.
Yeah, indeed.
Absolutely.
Look, I'm going to just give my 2 points, but I'd just make to say thank you to Ali, JK, Laurent, some super insightful points. Your organizations are really at the top end of what we're trying to get done in the industry. Thank you for your insight. Thank you for your thoughts. My last comment would be, 3 years ago, our CEO started off a mission, and that mission was to get to what we call Mission 21. And it's around all the things we've talked about, open banking, APIs. It takes a long time. We've seen that ourselves. We've learned a lot as we've navigated through this. And I'm sure you guys have as well, and the banks will as well. You will go through on this journey and you'll learn an awful lot. At the end of it, though, I think we'll be in a far better place to genuinely get value for our customers. And at the end of the day, that's what we're focusing on this to do. And I would say as my last comment, it is a once in a lifetime opportunity. You won't need to go digital the second time around. And on that, I wish everyone all the best of luck on their journey. And thank everyone for their time and passion today on this fascinating subject. Thanks, guys. Take care. Bye-bye.
Thank you, Paul.
Thank you.
Thanks, everyone.
Bye.
Bye-bye.
Thanks, Paul, and thanks to all the panelists for joining and share their insights. I hope you all enjoyed that. I'd just like to remind you that the session will be available for on-demand viewing, so please do take use of that. Thanks again for joining.